Okay, let's dive into one of the most exciting, but let's be real, one of the most confusing topics in finance right now, how to actually invest in Bitcoin. We're going to cut through all the noise, all the hype, and build a real, disciplined strategy from the ground up.
This right here is the #1 question. It's the first thing everyone asks, and honestly, it's where that feeling of uncertainty starts to creep in. But what if I told you it doesn't have to be a guess? There's actually a proven framework that can give you a clear answer based on your own situation.
And that's exactly what we're going to do. The whole point of this explainer is to take that guesswork and turn it into a simple, repeatable plan. We're going to replace that feeling of being unsure with a real sense of clarity and, most importantly, the confidence to actually move forward. Now, before we even start dreaming about the potential gains, we have to talk about risk. Bitcoin is incredibly powerful, but it's famous for its wild price swings. So the absolute golden rule of any smart investment strategy is this: you manage your risk first. This idea is the bedrock for everything else we're about to cover.
So the big question, how much? Well, here's a simple framework, the 1 to 5 to 10% rule. If you're a more conservative investor, putting just 1 to 2% of your total portfolio into Bitcoin is a great starting point. For a more balanced approach, think about 5%. And, if you have a higher tolerance for risk, you might go up to 10%. The beauty of this is it lets you get in on Bitcoin's potential without putting your entire financial health on the line.
All right, so we've nailed down how much to invest. Now let's talk about how you should be investing. And trust me, this is just as important because using the right method can protect you from the single biggest threat to your success: your own emotions.
You basically have two choices. Over on the right, you've got timing the market. This is the trap so many people fall into, trying to perfectly buy the dip and sell the peak. It's a super high-stress, high-risk game that, frankly, almost nobody wins consistently. But on the left, we have our secret weapon, dollar cost averaging, or DCA. All this means is you invest a set amount of money on a regular schedule, like, say, $100 every single month, no matter what the price is doing. It takes emotion completely out of the equation and averages your cost over time. And historically with Bitcoin, this steady, consistent approach has crushed trying to time the market.
So why does being consistent and thinking long-term work so well for Bitcoin specifically? Well, to really get it, we need to peek under the hood at the core economic engine that has been driving its growth for more than a decade now. It's something called the 4-year cycle.
And this timeline shows that engine in action. Roughly every 4 years, a built-in event called the halving happens, and it literally cuts the new supply of Bitcoin in half. This pre-programmed supply shock has, time and again, been a huge catalyst for a bull market. I mean, just look at the pattern. After the 2012 halving, the price went from $12 to over $1,000. After 2016, it jumped from $650 to almost $20,000. And after 2020, from around $9,000 all the way up to $69,000. The pattern is pretty hard to ignore.
So what does that look like in real money? Let's just imagine for a second you invested $1,000 back in 2013.
And he just held on. You did nothing. That $1,000 would have grown to a peak value of around $600,000. Yeah, that is the incredible power of patience when you combine it with an understanding of Bitcoin's long-term cycles.
But look, let's be totally clear. It is not a smooth, easy ride to the top. There are huge, gut-wrenching price drops along the way. But that's the deal. That is the crucial trade-off. The short-term volatility that can feel pretty scary is really just the price of admission for the kind of long-term exponential growth that has beaten every other major asset out there.
Okay, we've talked about the how much, the how, and the why. So now, let's pull all those pieces together into one simple, cohesive, actionable plan.
Here it is, the entire strategy in just 4 simple steps. Step 1, decide how much you're comfortable investing using that 1-5-10% rule. Step 2, automate your buys using dollar cost averaging. Just set it and forget it. Step 3, and this is important, secure your investment for the long haul in a hardware wallet. Think of it like your own personal vault that keeps your Bitcoin completely offline and safe. And finally, step 4, commit to holding for at least one full 4-year halving cycle. That's it. That's the whole plan.
When you boil it all down, it really comes back to this one core idea. Being successful with Bitcoin investing isn't about getting lucky or timing the market perfectly. It's about having a solid plan and, more than anything else, having the discipline to stick with that plan through all the ups and the downs.
So we'll leave you with this final thought. The strategy we just walked through. It's really simple. It's not complicated. So the real question isn't whether you understand the plan. The real question is, Do you have the discipline to actually execute it when things get crazy? Because that right there is what separates the successful long-term investors from everyone else.